I think one of the most fascinating things about Bitcoin is that, beneath the surface volatility, there are actually recurring patterns.
Yeah,
Especially when you zoom out and look at the historical data.
for sure.
It's like clockwork.
Yeah, it's pretty amazing.
Everyone talks about these 4-year cycles,
Yeah.
but can we really predict what Bitcoin is going to do
hmm
based on some calendar cycle?
Well, not exactly predicting the future,
Okay.
but understanding the phases within these cycles
Right.
can definitely give you an edge.
Mm-hmm.
Think of it like the seasons of the year.
Okay.
Winter's coming. Even if you don't know the exact date,
Yeah.
the first snowflake will fall.
Okay. I like that analogy.
Yeah.
So walk me through these Bitcoin seasons.
Yeah.
What are we looking at here?
So after a correction,
Okay.
we enter the accumulation phase.
Accumulation phase.
Yeah. Things are quiet,
Mm-hmm.
prices are relatively low,
Okay.
and savvy investors start accumulating Bitcoin.
Okay.
This is like the planting season.
Yeah.
Where the seeds for the next bull run are sown.
This is the time to be greedy when others are fearful, right?
Exactly.
Okay.
Then comes the markup phase,
Markup phase,
Uh-huh.
right?
where excitement builds,
Okay.
demand increases,
Mm-hmm.
and prices climb.
Yeah.
FOMO kicks in.
Everyone's talking about it.
Yeah.
Fear of missing out.
Yep.
FOMO.
That's right.
Things can get a bit wild.
Definitely a little crazy.
So this is our Bitcoin spring,
That's a good way to put it.
full of growth and potential.
Lots of potential.
But what happens when summer ends
Right.
and the leaves start to fall?
That's when we hit the distribution phase.
Distribution phase.
Yeah.
Okay.
The market peaks.
Mm,
Early investors start taking profits.
okay.
Things plateau.
All right.
This is like autumn, a time of harvest and consolidation.
So we enjoy the fruits of our labor,
Yeah.
but also prepare for the coming winter.
Exactly.
And winter arrives with the markdown phase.
yes.
This is the correction.
Mm-hmm.
Prices decline. Some people panic, sell,
It happens.
and the cycle begins anew.
The cycle continues.
Okay, so understanding where we are in this 4-year cycle can give us a roadmap.
Yeah.
Even if we can't pinpoint the exact turns. But there's another force at play here that can feel a bit like a financial roller coaster.
Yeah.
Quantitative tightening and easing.
Mm,
To be honest, these terms make my head spin a little.
I hear you.
It's like, okay, what does this mean for Bitcoin?
Yeah. It's easy to get lost in the jargon.
Right.
But grasping how these monetary policies impact Bitcoin is crucial.
Okay.
Think of quantitative tightening or QT, like hitting the brakes on the economy.
Getting the breaks.
The Fed reduces liquidity,
Less money flowing around.
less money flowing around.
Okay.
And investors tend to move away from riskier assets like Bitcoin towards safe havens like bonds or even cash.
So during QT, Bitcoin takes a hit,
Yeah.
while these so-called safe havens get a boost.
It's like a rotation.
Interesting.
And what's interesting is that altcoins,
Okay.
those other cryptocurrencies other than Bitcoin,
Right.
they usually suffer even more during QT.
Oh, really?
Yeah. Their value drops faster compared to Bitcoin.
Wow.
And we say they bleed against Bitcoin.
Bleed against Bitcoin.
Yeah.
Okay.
This is a key reason why many investors favor a Bitcoin-heavy portfolio during times of tightening.
So QT is like a crypto winter,
Yeah, you could say that.
and Bitcoin is the warmest coat you can find.
I like that analogy.
But what about quantitative easing, or QE?
Right.
Is that the thaw?
Exactly. QE is like stepping on the gas.
Okay.
The Fed pumps money into the economy,
Mm-hmm.
increasing liquidity,
More money flowing.
more money flowing,
Okay.
and encouraging investment in riskier assets,
Including Bitcoin.
including Bitcoin.
So QE is party time.
Let's not get ahead of ourselves.
Okay.
The market always throws curveballs.
Right.
But we did just see the Fed cut rates,
Okay.
and we're already seeing large cap stocks and gold rising.
Mm-hmm.
This could indicate a shift towards a risk-on environment,
Yeah.
which typically benefits Bitcoin.
Okay, I'm starting to see the pattern here.
Yeah.
These 4-year cycles,
Hmm.
QT and QE acting like this economic weather. But how do things like elections and global events fit into all of this?
That's where it gets really interesting.
Okay.
Your notes mentioned the Trump trade and the Harris trade.
Right.
These are perfect examples of how political events,
Mm.
even those seemingly unrelated to crypto, can send ripples through the Bitcoin market.
I'm all ears, break it down.
Okay.
Let's start with the Trump trade.
Okay.
What was that all about, and how did it impact Bitcoin?
So after Trump's election in 2016,
Okay.
we saw a market surge
Mm-hmm.
fueled by expectations of tax cuts and deregulation.
Okay. So the overall positive sentiment in the market, driven by those policies, spilled over into crypto, even though crypto wasn't directly involved.
Exactly. Investors were feeling more confident
Okay.
and taking on more risk.
Right.
which benefited assets like Bitcoin.
Interesting.
Plus, the Trump trade also led to an expansion of global liquidity,
Okay.
as policies aimed at economic growth encouraged investment.
Right.
This surplus liquidity further fueled the rise of Bitcoin.
So a rising tide lifts all boats, even the Bitcoin boat.
I like that.
But it's not always smooth sailing, right?
Right.
What about this Harris trade? How does that factor in?
So the Harris trade refers to how investors are positioning themselves
Okay.
in anticipation of policies associated with Vice President Kamala Harris,
Mm-hmm.
particularly her focus on social infrastructure and sustainable initiatives.
Okay.
These policies, while important, could potentially lead to higher long-term interest rates,
And higher interest rates mean?
less investment in riskier assets like Bitcoin.
Yeah.
If investors can get decent returns from safer investments like bonds,
Right.
they might be less inclined to put their money into a volatile market like crypto.
It's a domino effect.
Yeah,
Politics influences interest rates, which in turn influence Bitcoin.
exactly. It's all connected.
It's all connected.
Yeah.
Speaking of interconnectedness, the research you sent points to a surprising connection between Bitcoin and the U.S. labor market,
Right.
specifically the unemployment rate.
That's right. It might seem counterintuitive,
Yeah.
but the research shows a clear correlation.
Yeah.
Every time Bitcoin has failed to break through a certain price trend line,
Mm.
it's coincided with a rising unemployment rate.
Hold on. So if more people are out of work, Bitcoin goes down.
That's the trend we've seen.
Why would that be?
It all comes back to risk.
Okay.
When the economy weakens and unemployment rises,
Mm-hmm.
investors get nervous and pull back from risky assets like Bitcoin.
They get scared.
Yeah, and move towards those safe havens we discussed earlier,
Towards bonds.
towards bonds, gold, things like that.
Got it.
This explains why we've seen Bitcoin struggle to break through certain price levels lately,
Uh-huh.
even while the S&P 500 keeps climbing.
So even though the stock market might seem strong,
Yeah.
Bitcoin is picking up on these subtle signals of potential economic trouble
Yeah, it's further out on the risk curve.
through the unemployment rate.
That's right.
Interesting. So the unemployment rate is kind of like our canary in the coal mine.
Yeah, you could say that.
It's a key indicator to watch.
Very important to watch.
Speaking of big picture trends, there's one more piece I'm curious about.
Okay.
Bitcoin dominance.
Yeah.
What exactly is that, and why should I care?
So Bitcoin dominance measures how much of the total cryptocurrency market is made up of Bitcoin.
Okay.
It's a way to gauge Bitcoin's strength relative to all the other cryptocurrencies out there.
So a high Bitcoin dominance means Bitcoin is king of the hill.
Pretty much.
Okay. But how does that translate into actionable insights for me as an investor?
Historically, maintaining a portfolio that's heavier on Bitcoin has been a successful strategy,
Okay.
particularly during those QT periods we talked about.
Right, where altcoins tend to underperform.
Exactly. They bleed against Bitcoin.
Yeah,
So when the going gets tough, sticking with Bitcoin is the way to go.
makes sense.
And here's where it gets even more interesting.
Okay.
The research suggests that Bitcoin dominance tends to peak while Bitcoin is trading above its 20-week SMA,
Okay.
which is a technical indicator called the simple moving average. It's like a moving average of the price over the past 20 weeks,
Okay.
helping us see the bigger trend.
So we're not just looking at Bitcoin dominance on its own.
Right.
We're also looking at how it relates to this 20-week SMA.
Exactly. It's like putting together the pieces of a puzzle.
Got it.
And right now, Bitcoin is trading above its 20-week SMA,
Okay.
and its dominance is nearing a predicted target of 60%.
Wow.
This could be a significant signal for investors.
Okay. I'm definitely adding Bitcoin dominance and 20-week SMA to my watch list.
Good idea.
So all signs point to Bitcoin being the king of the crypto castle,
Yeah,
especially in these uncertain times.
it's been a good performer.
But how do we take all this knowledge and translate it into an action plan?
Right.
How do we navigate this current cycle and make smart investment decisions?
That's the million-dollar question.
Right.
And thankfully, your research offers some really practical guidance.
All right, lay it on me.
Okay, so it emphasizes avoiding emotional decisions,
Okay.
especially based on FOMO. You know, it's easy to get swept up in the hype,
Yeah.
but a level-headed approach is key.
So no panic buying when everyone's shouting from the rooftops about Bitcoin going to the moon.
Exactly.
Okay.
Instead, consider dollar cost averaging.
Dollar cost average,
Yeah.
what is that?
That means investing a set amount at regular intervals, regardless of the price.
Okay.
This helps you ride out the volatility
Mm-hmm.
and takes the emotion out of the equation.
So dollar cost averaging, got it.
Yep.
What else?
Think of yourself as an economic detective.
An economic detective.
Keep an eye on key indicators
Mm-hmm.
like unemployment rates, inflation, and treasury yields.
Okay.
They provide valuable clues about the overall health of the economy,
Right.
which in turn influences the crypto market.
So stay informed and be ready to adapt our strategy.
Precisely.
Okay.
And remember those political events we discussed.
Yes.
Stay up to date on policy changes,
Okay.
especially those that could impact global liquidity,
Hmm.
like those potentially linked to the Harris trade.
Right. Keep an eye on the news and understand the potential domino effects.
That's it.
So we're dollar cost averaging, we're staying informed, we're keeping those political and economic forces in mind.
Yep.
What about the structure of our portfolio?
Diversification is crucial.
Diversification.
While Bitcoin plays a central role,
Okay.
especially during times like QT,
Mm-hmm.
spreading your investments across different asset classes is key.
So a diversified portfolio with a healthy dose of Bitcoin.
Yeah.
What other assets should we be considering?
Large cap stocks
Yeah.
can provide stability during uncertain times.
Okay.
They're like the reliable workhorses of the investment world,
Mm-hmm.
less volatile than smaller companies.
Right.
And then there's gold,
Gold, the classic.
classic safe haven asset.
Right?
It tends to hold its value during periods of inflation or market turmoil.
Mm-hmm.
Think of it as your financial anchor in stormy seas.
Stability. This is
Right.
safe haven.
Right.
Those sound like solid additions.
Yeah.
What about something a bit more unconventional? I know a lot of people are curious about altcoins.
Altcoins,
Yeah.
the wild west of crypto.
Right?
While Bitcoin is the undisputed king,
Uh-huh.
the altcoin landscape is vast and full of possibilities.
Mm-hmm.
It's like exploring a new frontier,
It is.
but with high risk comes high reward.
So how do we even begin to navigate this altcoin frontier?
Yeah, it can feel overwhelming.
It does.
Absolutely.
It seems like there's a new project popping up every day.
There is.
It's hard to keep up.
Yeah, but a good place to start
Okay.
is by focusing on specific sectors
Okay.
within the crypto space.
Right.
You mentioned meme coins, AI coins, gaming coins, RWA coins, and Layer 1 coins in your notes.
I did.
Each of these sectors has its own dynamics and potential.
Okay, so let's dive in.
Right.
Meme coins.
Meme coins. Those are the ones with the funny dog logos, right?
Often. Yeah.
Are they a serious investment or just a passing fad?
Meme coins are an interesting phenomenon.
They are.
They often start as internet jokes or trends.
Right. But some have gained significant value,
Yeah, I've seen that.
driven by passionate communities.
So investing in internet culture, is there any real substance behind those memes?
That's the crucial question.
Right.
While some meme coins are purely speculative,
Okay.
others are actually building platforms and utilities,
Mm.
trying to leverage the power of their communities to create something valuable.
So even in the meme coin world, it's about separating hype from substance.
Exactly.
What about AI coins?
AI coins.
Yeah, those sound a bit more serious.
They are linked to projects using artificial intelligence
Okay.
to build innovative solutions in various fields,
Mm-hmm.
ranging from finance to healthcare.
Okay.
It's a rapidly evolving space with lots of potential.
Investing in the future of tech, that sounds promising.
It is promising.
But how can we tell which AI projects have real potential
Right.
and which are just riding the AI hype wave?
Look for strong teams, innovative use cases,
Okay.
and a clear roadmap for development.
Mm-hmm.
And as always, thorough research is key.
Research is key. Got it.
Don't let the buzzwords distract you from the fundamentals.
What about gaming coins?
Gaming coins.
They seem to be gaining a lot of traction.
Yeah, they're part of the exciting world of blockchain gaming,
Blockchain gaming.
where players can own and trade in-game assets,
Oh, wow.
potentially earning real-world value.
So it's like combining the fun of gaming with the potential of investing.
Yeah, exactly.
Are these gaming economies sustainable in the long run, though?
That's the big question.
Right.
Some gaming projects have seen tremendous growth,
Yeah.
but you need to carefully evaluate the gameplay,
Mm-hmm.
the tokenomics,
Okay.
and the long-term vision of the project.
Right.
Look for games that are fun to play.
It has to be fun.
It does.
Right.
And offer real ownership and utility for their players.
It needs to be more than just hype. It needs to be a game people actually want to play.
Exactly. Yeah.
Okay. What about those RWA coins?
RWA coins.
I'm not as familiar with those.
RWA stands for Real World Asset.
Real world asset.
These are tokens backed by tangible assets, like real estate or commodities.
Okay.
It's about bringing traditional assets into the crypto world.
So why tokenize these real world assets?
Right.
What's the advantage?
Tokenization can make these assets more accessible, liquid, and transparent.
Okay.
It can streamline transactions
Hmm.
and open up new investment avenues for people who might not have had access to these markets before.
Interesting. So it's about making traditionally illiquid assets more liquid and accessible.
That's the idea.
Okay, last but not least, let's talk about those layer one coins.
Layer 1 coins.
What are those all about?
Those are the native cryptocurrencies
Okay.
of blockchain platforms that act as foundations for other applications and projects.
Mm-hmm.
They're like the bedrock upon which the crypto world is built.
So investing in the infrastructure of the crypto universe.
Yeah, in a way.
But with so many layer one platforms out there, how do we choose the right ones?
Scalability, security, and developer activity are key factors to consider.
Okay.
Look for platforms with a solid track record,
Mm-hmm.
a vibrant community of developers building on them,
Right.
and a clear vision for the future.
This is a lot to take in. It seems like the altcoin universe is vast and constantly evolving.
It is.
Any final words of wisdom for navigating this space?
Approach it with a healthy mix of curiosity and caution.
Okay.
Do your research, diversify your investments, and don't be afraid to ask questions.
Good advice.
And remember, the crypto space is constantly evolving,
Mm-hmm.
so continuous learning is key.
It seems like navigating the crypto market successfully is about much more than just understanding the price of Bitcoin.
Yeah.
It's about understanding the bigger picture, the economic forces, the political landscape, and even the psychology of the market.
You hit the nail on the head.
Yeah.
It's about seeing the interconnectedness of it all.
It is.
And most importantly, it's about managing risk
Mm.
and making informed decisions that align with your goals and risk tolerance.
Speaking of risk management, I remember that powerful line from
Sure.
your research. Protect your psyche so that you don't lose confidence when the real bull run starts.
Yeah,
It's a reminder that this is a marathon, not a sprint.
for sure.
And staying mentally strong is just as important as having a solid strategy.
Absolutely. This market can be a roller coaster ride.
It can be.
Protect your capital, but also protect your mindset.
Right.
Don't let fear and greed dictate your actions.
Great advice. So we've talked about Bitcoin cycles, monetary policy, political events, and the altcoin landscape.
We covered a lot.
We've learned about dollar cost averaging, diversification, and the importance of staying informed.
Right.
But what does all of this mean for the future?
Okay.
What are some potential scenarios for Bitcoin, and how can we position ourselves for success regardless of what unfolds?
Right.
So we've laid a really solid foundation here.
Yeah.
But let's look ahead.
Okay.
What does the future hold for Bitcoin?
Yeah, that's the big question.
How can we position ourselves for success,
Right.
no matter what surprises the market throws our way?
Well, we can't predict the future with certainty.
Right.
We can use what we've learned
Mm.
to develop a robust strategy.
Okay.
Your research outlines two primary scenarios,
Okay.
a bullish one and a bearish one.
Okay.
And as we've discussed, the unemployment rate is a major factor.
Right. The canary in the coal mine.
Exactly.
Okay. Let's start with the optimistic outlook.
Okay.
What does that bullish scenario look like?
In this scenario, the unemployment rate stabilizes or even starts to decline.
Okay.
The Fed eases off on those rate cuts,
Mm-hmm.
and we steer clear of a recession.
Mm-hmm.
This points to a more positive economic outlook,
Right.
which, as we know, tends to favor risk assets like Bitcoin.
So we're talking smooth sailing, a healthy economy, and Bitcoin potentially taking off.
Remember, the market loves to keep us on our toes.
Right.
There are always unforeseen factors that can pop up.
Of course.
But in this bullish scenario,
Mm-hmm.
we could see Bitcoin finally breaking through that lower high pattern
Okay.
and embarking on a significant upward movement.
A breakout to the upside. That's what we like to hear.
That's the bull case.
But let's face the flip side.
Okay.
What happens in that bearish scenario?
If the unemployment rate continues to climb,
Okay.
exceeding the Fed's target,
Mm-hmm.
then a recession in 2025 becomes more likely.
And a recession usually triggers.
A flight to safety.
Okay.
Investors get spooked, pull back from riskier assets like Bitcoin,
Yeah.
and seek refuge in those safer havens we discussed earlier.
Bonds and gold.
Exactly.
Okay.
This could have resulted in another significant dip in the crypto market.
So the unemployment rate is our canary in the coal mine.
It's a good analogy.
Low unemployment means party time high. Unemployment means batten down the hatches.
It's a bit more nuanced than that,
Right.
but you've got the right idea
Okay.
that unemployment rate gives us crucial insights
Mhm.
into the overall health of the economy
Right.
and its impact on risk appetite.
Makes sense.
It's a key indicator to monitor closely.
Okay. Two potential paths. Bullish breakout or bearish downturn. How do we prepare for both possibilities?
Yeah. This is where those risk management strategies we discussed come into play.
Right.
It's not about trying to perfectly time the market.
Okay.
It's about having a plan for different scenarios,
Right.
a plan that protects your capital and your peace of mind.
Okay, risk management 101.
Exactly.
Let's recap those core principles.
All right.
What's the first rule?
Never invest more than you can afford to lose.
Okay.
This is fundamental to any investment,
Right.
but especially important in the world of crypto, where volatility is the name of the game.
So don't go all in, no
Exactly.
matter how tempting it might feel.
That's right.
Got it. What else is crucial?
Diversification, diversification, diversification.
Okay, I'm hearing you.
We can't stress this enough.
Right.
Spread your investments across different asset classes. Bitcoin, large cap stocks,
Mm.
gold, treasury bonds,
Mm-hmm.
and maybe a sprinkle of those altcoins you're curious about.
Right. A little bit of everything.
Exactly. This helps to balance your portfolio and manage your overall risk.
Diversification is key.
Yeah.
Check.
Yeah.
But what about timing?
Right.
When should we buy or sell?
Ah, the million-dollar question.
Right.
There's no magic formula,
Right.
but dollar-cost averaging can be a really effective strategy,
Mm-hmm.
especially in a market as volatile as crypto.
Remind me how that works again?
Instead of trying to time the market perfectly,
Okay.
you invest a set amount of money at regular intervals, regardless of the price.
Mm-hmm.
This helps you average out your purchase price over time
Okay.
and takes the emotion out of your investment decisions.
So it's a disciplined, consistent approach.
Exact.
No impulsive buys or panic sells.
That's it.
That makes a lot of sense. But what about those times when the market goes wild?
Okay.
Like during a massive bull run or a sharp correction? Should we adapt our strategy then?
Flexibility is essential.
Okay.
While dollar-cost averaging is a great foundation,
Right.
you might want to adjust your approach depending on market conditions and your risk tolerance.
So it's not a set it and forget it approach.
Right.
We need to stay engaged, keep learning, and adapt to the ever-changing landscape.
Absolutely stay informed,
Mm-hmm.
monitor those key indicators like the unemployment rate,
Right.
and be ready to make adjustments.
Okay, this has been incredibly insightful.
Good.
We've covered so much ground today.
We have.
But before we wrap up, I have one last question.
Okay.
What about you?
Mm-hmm.
How are you positioning yourself for the future of Bitcoin?
Right.
What's your personal strategy?
Well, I firmly believe in the long-term potential of Bitcoin.
Okay.
I think it's a game changer,
Mm-hmm.
a technology that could revolutionize finance as we know it.
So you're in it for the long haul.
Absolutely. But I'm also realistic about the risks involved.
Mm,
That's why I stick to the principles we've discussed. A diversified portfolio, consistent dollar-cost averaging into Bitcoin,
right.
and staying informed about market developments.
Staying informed. And what about those altcoins? Are there any projects on your radar that you're particularly excited about?
I'm fascinated by the decentralized finance space, also known as DeFi.
DeFi.
There's a lot of innovation happening there, and I'm curious to see how it unfolds.
Yeah, DeFi is definitely a hot topic. Anything else catching your eye?
I'm also intrigued by the potential of NFTs or non-fungible tokens.
Mm-hmm.
I think they could reshape how we view ownership in digital assets.
Right. It's a whole new world.
They're creating entirely new economies and ways of interacting online.
DeFi NFTs, you're definitely keeping your finger on the pulse of the crypto world.
Trying to.
But most importantly, you're approaching it all with a balanced perspective, combining your enthusiasm with caution and smart risk management.
That's the key takeaway I hope our listeners will embrace.
Yeah.
Bitcoin and the crypto space offer tremendous opportunities,
Mm-hmm.
but it's crucial to approach them with a clear head, a sound strategy, and a commitment to continuous learning. There's always more to discover, and the landscape is always evolving.
Beautifully said. This deep dive has been a fantastic journey.
It has been.
Thank you so much for sharing your expertise with us today.
It's been my pleasure.
And to our listeners out there,
Yes.
the crypto world is full of surprises. Stay curious, stay informed, and never stop exploring.
Couldn't have said it better myself.
And on that note, we'll wrap things up for today, but the conversation doesn't end here. We'll be back soon with more deep dives into the fascinating worlds of finance, technology, and all the exciting intersections in between. Until then, happy investing, and remember, knowledge is your greatest asset.